The idea is I don't have to have cash aside to settle a lawsuit or fix my car if I get in an accident or something, right? Because I have the insurance that will take care of that. And so I'm going to go deploy capital long-term into, quality investments that I think are going to give me a really meaningful return over time.
Really, the whole idea behind the insurance review is finding out what coverage do you have? What coverage should you have? Do you have enough? Do you not have enough? Do you have too much? Like just really looking at it to make sure that it's optimized within your full financial plan.
Information presented on this program is believed to be factual and up-to-date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey, welcome back to another episode of the Ducharme Wealth Management Podcast. I am your host, Brandon Ducharme, joined by Carissa Bertrand, my colleague here. And it's that time of year again. It's Q3, which means one thing. It's insurance review time. The least exciting topic to anyone I know. But here's the deal. We review insurances in Q3 for a couple of reasons. One is it tends to be the boring time of year that not a lot of other stuff is going on. So review the boring thing at that point. So, our clients know Q1, we look at estate planning, nice and quiet at the beginning of the year. Q2 is people finish up taxes. We look at taxes. Q3, we do the insurance review. And Q4, we go ahead and look at the income planning for the following year. And so Q3, we look at insurance, 2 reasons. That's when everyone goes on their summer vacations, has their near-death experiences, and they might take it serious for once. The second thing is that it also leads into the open enrollment season that happens towards the end of the year. So updating health insurance, elections at work, or employee benefits at work that way, or making Medicare changes, whatever it might be. Mm-hmm. So the whole idea is to have some conversations ahead of time and plan. So when those open enrollment periods begin later in the fall, you know what you're looking for, you know what you need to do, and you're not scrambling to try and get our take on it, which sometimes is more complicated than, calling up and saying, do I get option A or option B? There can be some nuances there that you want to be aware of. Not always, but sometimes it can be. And so we hate to be scrambling at the last minute. So we're going over insurance reviews. So, Carissa, what are the big, now there's a lot of insurances out there, a lot. What are the main ones that we tend to discuss with clients?
So some of them are going to be like life insurance, disability insurance, maybe long-term care insurance, Medicare,
health insurance.
Or health insurance. Yeah. Yep. I say Medicare because a lot of our clients are in that phase of life. Not all, but some. We'll even look at, homeowners insurance a little bit, some property casualty, just making sure that, you're not overinsured, you're not underinsured. If you have questions, we can look at that. But mostly it's going to be around the life, disability, long-term care, health insurance, those types of things.
Yep. Yeah. So I kind of think about it in the categories of what I tend to call like the financial planning insurances, where you've got a really interesting plan in place. And so that tends to be life insurance, disability insurance, long-term care. Requires some planning to execute, right size, that kind of stuff. Then you have your health insurance, and then your property and casualty insurance, which is liability insurances, right? Yeah. So that's the stuff. Yeah, homeowners or renters insurance, auto insurance, umbrella insurance, that kind of stuff.
Maybe even business insurance or commercial.
Yeah, if you're a business owner, and what I'll say is, depending on the size of your business, you definitely might consider having a really good, highly qualified insurance agent on that. And we're happy to be involved in those conversations. But sometimes they are a bit more in depth and you really can become unique to the business, right? Yeah. And so that does involve an additional real layer of significant expertise. But like kicking it off. So we have a checklist we kind of go through, And there's a lot of things to check on there. But life insurance, which we just did an episode on recently, we can go through and just make sure that you have the right amount of life insurance really quick. Hey, we can kind of rerun the calculations. Do we need more?
Yeah.
Do we need less? If you need less, how do we?
More kids? Have you,
what's your options what's your options at work to add more? Did you lose coverage at work? So now we need to get it in the private place, or might you lose it in the next year because you're thinking you're going to quit jobs or leave your job or start a business, right? That kind of stuff. Disability insurance, just looking at, hey, did your income increase this year? Does a disability policy you have that rider clause to increase your coverage as your income grows? Do we need to go help you facilitate that? Is it appropriate still for your needs? Like, do these things, do you still need it? Right? Sometimes we've met with people and we look at it and say, you don't even need it anymore. Yeah. You can just stop paying this premium. It's not super common, but it happens. Long-term care insurance. That's a really interesting one. People so often overlook. They will, long-term care insurance got a really bad name because it was, in my opinion, quite predatory for a long time, because it worked more like homeowners insurance or auto insurance, where you pay a premium and they kind of say, okay, if something happens, you can have this benefit. But every year the premium would go up, just so it was annually renewable, if you would. Mm-hmm. And so what happened is people would find themselves in the situation that they get into their 70s and 80s and the premium has crept up so significantly. I've seen it $10,000, $15,000 a year, and they're going to get, $40,000 in benefit or $50,000 in benefit. You're going like, this is madness. Yeah. But what if it's this year that something happens? So it becomes this really super difficult conversation to wrestle with, right?
Yeah, especially when they're at that age where it's a lot more likely that something could happen.
And that's why the cost got that high, right? Yep. So I did a really good episode with my dad back earlier this year about long-term care planning and what that looks like. So encourage people to review that if you want to look up that episode. Blue form, if you guys want to just make a note and just drop that in the comment section, or drop that episode in the description. But yeah, we just review that and hey, what's changed or what resources have come to the table that maybe you can get that, or, and here's the thing about long-term care insurance. Sometimes it's too early to really start planning for that. Depending on where you're at in kind of the wealth building cycle of things, it might not be appropriate. It might be really appropriate. It might be too late. But we review it, homeowners and renters insurance. And what this comes down to is, do you have the right amount of insurance? What are some common mistakes that you have found reviewing people's or talking to people about their homeowners or renters insurance?
One of them is underinsured, that people are just going to barely have the required state minimums, but that it doesn't really make sense, because if they're, if something happens, the cost of what it's going to be to replace that, it's not going to be sufficient with just the minimums from the state required. So that's something to understand, like how much is that actually going to be a benefit for me? Yeah.
I think the biggest one I've found for people is that I review it and I'll be looking at a statement. It'll say, member cents or, client cents. And it'll say 2012. And I'm like, oh my gosh, it's been 13 years since you, and they're like, oh, I've been so happy with Joe. And I'm like, okay, but have you reshopped it? It's like, can we get some new quotes going here, right? And there's nuances between policies, and I don't think any particular insurance company is the best out there. And for what it's worth, we don't sell property and casualty insurance. We have no horse in this race, other than just helping clients identify an opportunity to either, save money on their premiums or get the right amount of insurance that they need.
Just optimizing that coverage.
Whatever it might be. Yeah. And it's because we understand nuances of their life that a lot of times their insurance agents don't really understand. And so we have the ability to maybe help give them some additional guidance and then work with their insurance agent to say, hey, let's get some new quotes. How much would it cost to add this feature? Or we can see here on a statement how much it would save us to remove that potentially. And it just allows us to, again, work with and also ask some of the questions like, well, is there another carrier nowadays that carries, a better pricing for this risk profile of client or demographic that they're in?
Another aspect of it too, within the financial planning, is understanding what their deductibles are. And so that as we're doing the income replacement planning or things like that, like, do you have enough in your emergency savings or in the liquid savings to be able to pay for the deductible if something happens? Just kind of going through all the nuances there with that.
Do you know how madness it is to have like $20,000 or even $10,000 in your savings account and then have a $500 deductible? Like, to me, that's madness. It's like,
what?
A
lot of cash.
Because you're paying so much more. Well, because here's the thing is typically what you're going to find is you're going to pay so much more premium. Like, you're going to pay in the course of a year, $200 to $300 extra in premium. So you're saving, if you get in an accident, is really only like $100 or $200 maybe. Right. Look at the illustrations, get the quotes, but that's kind of what it just sort of works out that way.
Yeah.
And so all of a sudden you're like, you have money to pay deductible, like manage your insurance costs.
Yeah, exactly.
All else being equal, like you're better off probably going with a better insurance company and pay and have $1,000 deductible on a higher quality company
with a lower rate. Then
have an insurance company of more questionable creditworthiness or customer service levels, but have a cheaper deductible for the same rate, right? Like there's some of these nuances. And again, these are the perspectives that we tend to be able to coach people through a little different because we understand them from a different angle. We're an unbiased party. We're just trying to help them. Whereas the insurance agent is trying to inherently sell them something.
Yeah.
But there are some wonderful insurance agents out there, and we like working with them.
Yeah. Let's see, with the homeowners and auto, like just understanding do you have the right type of policy? I've seen a few where they live in a condo or a townhome and they're paying for an actual home instead of the HO6 policy or something like that. That they could be paying like $25 a month for. Yeah. And instead they're paying like $125 or something like that a month. So even just making sure that you know what is covered and what type of policy you have is important.
Yeah.
So.
Yeah. Hey, here's another idea too. So earthquake insurance and flood insurance are two different insurances that are not included in your homeowner's insurance.
They're typically like an additional type of policy that you can include in there, but they're not included automatically. And
a lot of our listeners are in Wisconsin or Utah. And so they're probably thinking, well, that's like not going to happen by me. I don't live by, I don't like live on the lake or live on a river that floods all the time or something. And, and no earthquakes by me or whatever. Well, that's great. It's going to be even cheaper then. Mm-hmm. So consider it. And here's why. Remember, if water comes into your home from outside, that's flood. It doesn't matter if it was a hurricane. It doesn't matter if it was a hurricane. Yeah. It doesn't matter if your sprinkler had broke and flooded the basement, right? Like while you were out of town. And it's just water from the outside is flood. And it's a different type of coverage. So be aware of that. Mm-hmm. And, if you live in an area where you have something going on around your house where you're like, that could happen. Look, I'm not saying buy it. I'm saying get a quote. It's worth looking at.
Yeah.
Flood is probably not the one that's as nearly as catastrophic as earthquake insurance, though, which is something my dad's been so oddly passionate about my entire life because he found out. So it was like, I can't remember if it was in the late 90s or early 2000s. And Wisconsin actually runs in this like major fault line and is dormant. There's not a lot of, movement on it, but it's like a huge fault line apparently.
Same with here in Utah.
And ours can be a little bit more active though here still. But Wisconsin's like, that is a doornail, like, but it's huge. Allegedly. I mean, I'm not a geologist or whatever, right? So like, but what it does is earthquake insurance, as my dad found out, is like way, way, way cheap in Wisconsin. I want to say it's something like $6 a month. Like it was like $100 a year or something, right?
Yeah.
And so he bought it and he's like told people, I've heard him my whole life tell people like, get the earthquake insurance. And listen, like we don't love paying insurance in our family. Like we don't love it any more than the next guy. It's like taxes. Like no one is excited to pay taxes.
Yeah.
But at least insurance, I really feel confident in the safety net they're promising me via payment. Okay. So why is earthquake insurance so important? Well, the thing that they do have in Wisconsin that not as many people in Utah have, particularly here in Southern Utah, is basements, right? And so if you have an earthquake and your basement collapses in, your house falls down on top of it, right? And you call up your homeowner's insurance and say, hey, that earthquake that happened yesterday, my house collapsed and boom, it's all laying in a rubble pile in what was my basement. They say, well, that sucks. And you're like, what the heck? And they're like, no, earthquake, not covered by your homeowner's insurance. You need an earthquake policy. And that is what we call kill shots to most people's net worth, right?
Yeah.
So for a couple dollars, you tend to be able to avoid a kill shot, right? And that's what insurance is all about. Super low probability makes it cheap.
Yep.
But if it happened, it'd be super high impactful, right?
You're just transferring
all your
the
home
risk.
equity gone.
Yeah.
In fact, not only is your home equity gone, you still owe the mortgage. You know what I mean?
Yeah.
That's bankruptcy waiting to happen for most people. Your average family.
That is awful.
Well, think about it. Your average family can't, withstand a $3,000 expense.
Mm-hmm.
How about a $300,000 expense? Oh, and by the way, you have to pay off the first one and then still build the second,
still build another one,
build the
and pay your
replacement,
property
right?
taxes at the same time.
Yeah, yeah, you're done, right? So, look at those insurances and just again, I don't know, maybe I'm the crazy financial advisor that I'm willing to punch in a client's address and be like, hey, it looks like you live really close to a river. Have you looked?
Yeah.
Or, hey, does that house have a basement? Or in Utah, walkout basements are way susceptible to minor issues from an earthquake. So remember that it doesn't have to be some massive earthquake if you live on the side of the mountain or have a walkout basement. Now that coverage probably costs you a little bit more. I'm not saying buy it. I'm saying consider it. Look at it.
Yeah.
See what the cost is.
Understand your risks.
And then understand what the risk is if you're not going to get the coverage, right? Are you okay rolling the dice on that, so to speak, right? And if you are, that's okay. Just be informed. Mm-hmm. Okay. Knowledge is power.
Yeah. I think the whole thing is just making those educated decisions on what type of coverage you need, how much coverage you should have. And, if you decide not to add some additional coverages on there, then just knowing what that looks like. If those incidents do happen, how could that impact you? So that way you can make those educated decisions and feel good about it.
Umbrella policies, super commonly overlooked.
Yes.
Here's the deal. In today's day and age, if you own a home and have a job, basically, you probably should be considering an umbrella policy. And the reason why is, remember that these freak accidents can happen, and your homeowner's coverage only covers a certain amount, right? Or your auto insurance only covers a certain amount. And after that is absorbed, the burden is still on you. So, if you get in an auto accident and, kill someone, right? Somebody dies. And, that lawsuit goes through and they say, well, okay, this family is awarded $2 million, but your insurance only covered $500,000. You still owe $1.5 million in that lawsuit. Mm-hmm. And that's where an umbrella policy comes in to pick up the additional tab. Just have some sensitivity around that. And if you have assets to lose in today's litigious landscape, I typically encourage people to really consider a umbrella policy. And
even another side of that where, not with the car accident or auto insurance is if you have different things at your home, if you have a trampoline or a swimming pool or different things that might
swimming pools, trampolines, dirt bikes, and dogs.
Yeah.
You got one of those four. And you have assets to lose.
Umbrella insurance, because even if you're not home and a kid just comes over to jump on your trampoline, like a neighbor kid, and they get injured, guess what? That's your responsibility on your insurance.
Even if you didn't authorize them.
Yeah. So it's things like that too, that you can do your best to try to mitigate all these instances. But there could always be something. And so just making sure that you're transferring that risk away from yourself to the insurance company to be able to pay for those liabilities if something happens. That's what you're doing.
Remember, the idea here too isn't to say, okay, now insurance has been such a boat anchor drag for middle America and lower class, where they spend all their money on insurance, and they have to, because otherwise if they don't, one little thing happens and it blows their life up. So now they're subjected, and they're in this vicious cycle where they not only have to buy the insurance, they have to buy the extended warranties. And because they buy the extended warranties on everything, they don't have the money to, buy something outright, which means they have to finance it next time, which means they have to pay the financing costs. They have to buy the insurance, and then they have to buy the extended warranty because if something happens, right? And it just get loaded up on all this stuff. Cycle. Yeah. Listen, here's my philosophy of insurance. Get as much as you need to avoid catastrophic issues. Okay. Be really aggressive with your savings rate and invest, not invest aggressively in terms of the investment selection, but aggressively allocate your money, the rest of your money, towards investments that are going to grow
your savings rate.
And the idea, the idea is I don't have to have cash aside to settle a lawsuit or fix my car if I get in an accident or something, right? Because I have the insurance that will take care of that. And so I'm going to go deploy capital long-term into, quality investments that I think are going to give me a really meaningful return over time.
Yeah.
And in aggressively getting those deployed out to, and minimizing how much cash you just have in a high yield savings account over time, which shouldn't be zero still, by the way. You should still keep some. You really can outpace like the drag that insurance carries. However, if something catastrophic comes along, you don't have to say, oh, well, all this money I've been saving and investing, I got to blow it out to fix the issue, right? So that's the idea. It's like kind of a barbell approach of, super secure on one end, super aggressive on the other end, right?
You want to have that optimal balance there.
Yep.
Sure.
The middle's really tough. Middle's super tough. So that's sort of that. Listen, if you're not one of our clients, hit us up. Message us on the website, email us, call us. Our phone numbers are on there, ducharmewealth.com. We'll send you our checklist if you want. So you can go through your own insurances, grab them, get the checklist. If you go through the checklist and you have additional questions and you're like, oh man, I went through the whole checklist, but I've got this one little thing. I don't know, just reach out for a consultation. We'll chat with you. We'll let you pick our brain for a couple minutes. If you have put in the work ahead of time, then we are happy to try to come through and give you a little bit of extra value. We appreciate people that listen along and people that are proactive in trying to be doing the right thing for themselves. So I think that's really kind of it on that. Health insurance. Some considerations we look at on that is going to be typically around the HSA and catastrophic issues. So, and then there's a whole slew of fringe insurances that typically are like an employee benefit packages, like the accidental death and dismemberment policies, the hospital indemnification policies, critical illness, the accident,
short-term disability.
Yeah, short-term disability option. Usually that one's actually included typically in a benefits package. Anyways, we look at all of them. We'll look at all of them with you if you get your employee handbook.
Yeah, just grab it and we'll help you figure out what plan is right for you.
Yeah, just ask HR to say, hey, could I get a copy of the employee benefit summary? Gather it and then just bring it to us. We'll sit down. We'll look at it with you. Send it over to us before your meeting. Sometimes those don't come out till really close to when the benefit selections are. And in that case, what I tell people is get this year's then, right? Get this year's, send it over to us. They don't change that much year over year typically. Yeah. So what we can do then is at least get a game plan worked out. So we have like a 90-95%. Okay, this is kind of what we're doing. And then you just have to tighten it up once you have like the final, right? Yeah. So that's sort of the game plan there. Anything else?
I think that's pretty much it. Just really the whole idea behind the insurance review is, finding out what coverage do you have? What coverage should you have? Do you have enough? Do you not have enough? Do you have too much? Like just really looking at it to make sure that it's optimized within your full financial plan, and considering all the different aspects of that. Yep. So, insurance is never fun to talk about. It's not fun to pay for, but it is nice to have when you need it. And so that's really what it's there for. I have been on the receiving end of insurance checks that I'm very glad I had the insurance for. Yeah.
Personally. It's one of those things you hate to pay it, but you're happy to have it.
Mm-hmm.
So savvy people figure out how to leverage and work around that and say, okay, this is by designing this right and having the right protections from insurance, it is enabling me as a savvy long-term investor to make wise decisions with the rest of my capital. And I'm going to go deploy that capital in an efficient manner to make this an additional layer of win-win under the surface of the whole thing, rather than just, hey, I paid a price, I get a coverage.
Yep.
So, well, hope everyone's enjoying nap time. Another episode on insurance, my least favorite topic. It's everyone's least favorite topic, let's be honest. Again, if you have questions, reach out. We're happy to sit down. We're happy to help. If you're one of our clients, be on the lookout in Q3 here for an email coming your way about this. We will see you guys all out there.